welcome to May's webinar for Kenny and Kenny. I'm Tim Kenny. I'm a CPA. I've got some other credentials that make me a good candidate to present this webinar on exit planning. And with that, we're gonna dive in. Well, we should have some time at the end for questions. And by the way, this presentation, if you like this, it's not PowerPoint. It was created by Liz, our very talented office manager on Canva. So if you're looking for presentation software, it's a great option. So, little legal disclaimer. This information, we prepared it for you and our clients, and if you want to use any of it, you're more than welcome to. Just let us know that you're going to do it. A little bit about Kenny and Kenny. We like to think of ourselves as your partner without equity. We're passionate about helping our clients develop businesses that work for them, that fit them. We've got clients from startups to ones that are looking to exit. And we're committed to that long-term relationships because any worthwhile plan takes time to execute on. And we try to customize our services to fit our clients' needs. Today, we're going to cover why it's important to start with a why, the keys to a successful exit, and the exit team needed. So this is one of my favorite quotes. He who has a why to live can bear almost anything. Nietzsche. And, essentially, if you've never tried to sell your business, you will need to come up with a strong why, or that's my recommendation to you, because it is a very painful process, or it can be, it usually is. You're under audit by every potential buyer that you decide to engage with. So having that strong why is really important. Also, consider that for privately held businesses, there is no exchange. There is no NASDAQ that you can liquidate your stock on. So this takes time. Generally, I tell clients, expect 3 to 5 years if you want to get your full value. As I mentioned, it's important to have a strong why because the owner needs to be involved. Anyone buying your company is going to want to talk to you and understand everything about your business. As you'll see in a bit, it requires a lot of different professionals. Professionals don't work for free. So not only is it going to require a lot of your time, but it's also going to require some resources as well in fees to professionals to support you. But it's critical that you get the right team. So these are some of the whys that I come across in having done this for the last 20 years. Clients will say, hey, it's been a good run, but I'm tired of being the owner. I want to continue in my profession. Recently, I had a client who was a very successful professional. He's still practicing in his profession. However, he just didn't want to be the owner any longer. So he found someone to sell to and successfully did. others will say they have other interests. Maybe there's a hobby and they've achieved some financial independence and they decide if I don't do it now, I'll never do it. So I need to sell this business. And some want, a different role, kind of like that one client that was just looking to be one of the professionals and not the owner. So um, these are some of the keys to a successful exit. I think financially, when you're looking to sell a business, um, the higher the number, the better, generally, unless you want to sell it to uh, particular individuals. Maybe it's team members that have helped you build the business. So, but in the case of price, the price is going to be based on earnings. Um, Also, some other key factors are a diversified client base or customer base. Because if there's too much of a concentration with just one customer and that customer leaves, that business can go from strong earnings to no earnings or negative earnings overnight. Strong management team. This is something that we enjoy helping clients develop. This makes being the owner a lot more fun when you have a strong management team that can support you and do some of the management work. It's more fun to have a team than to just be the person. So, and then in the way of selling a business, if you've got a management team, a new owner can just sub in and they've got support already built in. Um, a team performance plan so that the team members are motivated to do the important things in a business that keep it successful. And then similarly, systematized processes. So if the processes are documented and in place, when one person walks out the door, that important process can continue after they leave. So all of these factors will add to the value of a business. And to the extent that you don't have any of these in place, the business will be discounted appropriately. So another important thing in exit planning is getting the timing right. So financially, it's important to understand what the next phase of your life is going to entail. Um, you know, are you going to be sitting on a beach like the couple that we saw on the first slide? If that's the case, well, where and what's the cost of that? And then looking at your assets to see if without the business, they can support that type of lifestyle, that type of location. And so, to the extent that they can't, that's something that we call a wealth gap. So that wealth gap, we calculate and we look at that in relation to the business value. And if the business value is not there, then we help you come up with a plan to close that gap or fill the gap or exceed the gap. But um, if there is a wealth gap, it's not the right time unless you absolutely have to. Maybe there's a situation where your health won't allow you to continue on as the owner. In that case, you don't really have a choice. So, um, but we can help you work through that. Now, let's look at the team to a successful exit plan. First off, understanding the real realistic value of your business is really important. And the person or the credential to do that is a valuation expert. Um, I'm a CVA, and in most cases, I don't prepare a valuation report specifically as much as I prepare an estimate of value. In an exit planning engagement, I'm preparing estimates of value based on potential buyers. So, and as I mentioned earlier, some owners want to sell to the team that helped them build the business. The team may not have the financial wherewithal, uh, in which case a strong relationship with a bank to help fill that gap is important. Uh, in some cases, the owner has a big wealth gap. So hopefully create some demand for that business. Essentially, usually the greater the potential value and options to exit. So, and then an attorney is critical as well. The attorney helps protect the the buyer and the seller, and these deals don't get done without attorneys on both sides. Um, and then the CPA, as I mentioned earlier, these are a process and they can take some time, and it's not generally a fun experience for the owner. If the owner has a CPA firm like ours handling the diligence, that can make it a lot easier to uh, navigate, because when you think about it, depending on how many buyers you want, each buyer is going to want all of the financial information. And so, as a CPA firm, we organize it. We can create a data room so that it's easy to share the important information or requested information. And having a team like this in place, number one, makes the experience a lot better. Number two, it ensures that you're ready. So, kind of going back to the valuation expert, you don't want to find out after you've been under a non-compete with, or a letter of intent with a potential buyer after they've been looking at your business for a couple months, that the value isn't there. So going in straight off and getting an idea of how much value your business is worth, so that you know whether the letter of intent is legitimate or not, and saves you from some headaches on the back end, is really important. Um, oops. So- And then this is, an example of sort of our exit planning engagement. So generally, we will schedule these over a few months. And in that first month, we're identifying what the successful business exit looks like, um, identifying the strengths and weaknesses of the business to exploit. We're calculating estimates of value based on certain buyers. Um, and then we're also putting together a listing. Just like if you were going to list your home, there would be a sheet that identifies the features of your home and all of that. And looking at the value in relation to that wealth gap is important at this point as well, to know whether your timing is right or not. If the timing's not right, then we might spend some time and work on your business model. The business model is how you create profit, or how you create earnings that supports the price that you need for your business. And then we'll also spend some time working on your accounting system. Um, in the case of privately held businesses, usually it's QuickBooks or QuickBooks Online. And so we'll make sure that everything's organized in a way that that diligence goes a lot smoother. And we give the potential buyers what they need to see to help you get the value that you want out of your business. And then finally, with our tax team, we would look at the deal structure, because essentially that is going to drive how you're taxed as the seller. Um, and then on the buying side, what their ability is to expense some of the costs of that sale. So um, that is essentially the exit planning engagement. And even if clients aren't ready to exit immediately, it's still a good idea to go through this process and just have this in mind. You never know when you're going to get someone that wants to buy your business, and sometimes you don't really realize that you are going to need to sell. I mentioned health. That might be something that speeds up an exit. And if you've already done this type of work, you'll be in a better position to respond. So we've gotten through the presentation. We have some time, so I'm going to open up the floor to some questions, and feel free to unmute yourself and ask a question, or just chat it in there, whatever your preference is. Or if you have any comments or anything to add.
Tim, do you ever work with brokers?
I do sometimes.
And so are most of your clients looking to sell, or are they looking to buy too?
Some are looking to buy. Some are looking to buy. We've got a client, I think, that is, maybe closed on the business today, because I got a note. They were trying to call me right before this started, and they had one that they were looking to buy. And I believe that may have come from a broker. So, yeah, brokers, like I mentioned, the benefit of a broker is one that is going to help you expand your marketplace. So if you're in the selling position, expand your group of buyers that are interested in your company. Um, if you're looking to buy, kind of expand your universe of opportunities.
Yeah,
So,
I mean, that makes a lot of sense. It's like real estate, right? So you want to get a broker involved so that you get people coming through and, maximize the value or the purchase price, not so much the value, but the price. Yeah.
Jim, I'm glad you brought up, it's just like selling a home, because that that one reson everyone's, living in a home that they either bought or sold, or will be selling. And it's just like a business. The broker helps you find the house, broker helps you sell the house. You're not going to list your home for sale if it needs some obvious repairs, because you're gonna you're not going to get your full value.
And do you do the valuations, or how do you handle that?
Usually I'll do the valuations or estimates of value. So, and I approach those sort of like an educational process for the client to understand their value, understand um, what the drivers of the value are, because if the value isn't there, then we talk about what needs to be there, and in order for them to get the value they want out of it.
So basically, you tell the business owner to try to remove themselves from the business and let it run before they sell it.
Uh, you know, maybe, I mean, that would, if the business is earning, say 100,000 with the owner in there full time versus 100,000 with the owner sitting on the beach that we saw at the start of this presentation, the second is going to be worth a lot more. So that is a success factor. Kind of related to value, I've got a chat for, your company is a moving target, obviously growing, hopefully. When is the right time to start the process? The value will change over time, right? Yes, the value will change over time. It's constantly changing. Um, and In some respects, it's a moving target. Um, but, it is starting the process early helps you avoid surprises, negative surprises, that the value is not there. Starting early allows you to include the value of your business in your estate planning, allows you to include it in your financial planning and your plans. And if something happens, if you have an emergency type event, you you can have, you know, you have time to respond. Just give you an example. Many times, key owners, key employees are covered with life insurance. So understanding the value of your business helps you determine how much life coverage you need in order to be fully covered.
Oh,
Um,
yeah.
so,
On that, actually, I handled a purchase of a business, and it was being bought by another owner of the business who's basically buying out his partner, and they had life insurance, and they're called keyman policies. And when he purchased it, one of the assets that was sold was that policy, so that the purchaser was still the beneficiary. And you can do that even though he wasn't an owner because the policy pre-existed. And so, unfortunately, within 2 years after he purchased it, the other person died.
but the policy was in
But the
place.
policy was in force and it was paid out to him. So, from the buyer's perspective, it was like a major windfall.
Yeah,
So, there's little details like that. So, those key man policies are key.
definitely. It just ensures that you exit the right way. I mean, you put your blood and sweat into building a business, and then, to have it not go the way that you planned, if you have an event, um, it just it it can be a mess. So, just give you an example. I had lunch with a Northwestern life insurance person, and they've been selling insurance for a long time. They on their own business took out life on themselves so that the business could pass to the team, and then the spouse would get the funds that they needed to continue the family's lifestyle. So, um,
Right.
it's important to start if you haven't already done this. I mean, really, every business needs to go through this process.
Well, thanks, Tim. I got to get running.
Okay,
Well,
thanks
there's
for
one
joining
one
us.
thing though I wanted to say here. You hear me?
Yeah.
Yes,
Okay. Is successful businesses adapt to change, and sometimes their industry or profession changes, and so if the existing owner isn't willing to adapt to change, that could be one of the whys they decide to sell the business. Could be another why. That
Sure.
aspect of the whys you had on your first list there, Tim.
Oh, yeah. Yeah.
Yeah. Okay.
Yeah.
Well,
Because if they're not open to change and their industry is changing around them, they're going to be losing value. So they may as well get
the
get
horse.
out of the business while they can.
Right.
I mean, it's, again, it's important to start if you don't have anything in place, it's important to start right away because
Maybe that's why you said that each year, part of the year-end tax planning and is to maybe look at the value of the business and how it's changed, you said earlier. I think that's what you said. To go through the steps of looking at exit planning.
yeah, it's just it's important to start and and always look at the moving target of value. So someone had chatted in about the value of a business being a moving target. And I believe that's what you're referring to. And I completely agree. So it's good to, once you have a valuation, like a baseline valuation, it's easy to update it. So, um,
Okay, well, thank you very much, Tim, for uh, doing this webinar. It's really eye-opening and appreciate it.
yeah. I mean, obviously, we live in a world where we can't control everything, but the things that we can control, it's important that we control. And this is a big one we can somewhat control, and we should.
Sounds like stoicism.
Maybe,
Okay.
maybe. I'll have to change the title, exit planning and a stoic approach.
There you go.
All
Okay.
right. I love it. I love it. Well, thanks everyone for joining me. And appreciate you all. Like all the other webinars, we will have this on our website available for you to listen to.